Budget euphoria is slowly fading away on Dalal Street as global headwinds stare in the eye. Geopolitical tensions involving Ukraine and Russia, coupled with fear of easy money drying up amid soaring inflation, are giving a rude reality check to stock market investors. Yesterday, the BSE Sensex plunged over 1300 points in intraday trade, while the Nifty 50 slipped below the 17,150 level. The Nifty 50 and BSE Sensex tumbled for a third straight day and moved below the highs made on budget day. The indices ended nearly 2% lower at 17,214 and 57,621 respectively. With this, the markets have turned negative for the year and are down 1% YTD. UR Bhatt, who is co-founder and director at Alpha Niti Fintech, believes markets can fall another 3 to 5% from here on, as an actual clash on the Russian border is not priced in at all.
See, as far as the reasons for the market trending downwards is, one is of course the interest rate hike that has come in, talk that has come in the US, and the tightening that and the quantitative tightening that you would see, because the quantitative easing business or buying a security is going to come to an end, and they will probably have anything between 4 to 8 hikes for the next 18 months. So that is certainly a negative. Second is we have the MPC meeting tomorrow, where also I think there would probably be some talk of a hike in interest rates, tightening of the monetary situation and stuff like that. Third is internationally, if you see the Russian border crisis is sort of getting worse, and I think even the US is already sending troops and stuff like that. So therefore, there is a flashpoint there, which certainly is not going to be good for global flows. And then you have oil prices, which are scaling up new heights. So that is again going to be negative for India. They're all priced in, but an actual clash on the Russian border is not priced in. Then there is still, what happens is there is certainly some talk of interest rate hikes in the US and in India. But when it actually happens, I think there is still further sort of negative negative reaction possible, because it all depends on how the communication is worded. Because if there is a change in stance in terms of tightening is certainly budgeted, but how tight is again something that will come out of the communication. So therefore, there's therefore further possibility of market sliding down. Well, as far as the Nifty is concerned, I think 17,000 is a very important support. But if that goes, then it could go down further by another about 300-400 points quite easily. So what we're really saying is that market could come to probably a 3 to 5% downside is entirely possible.
G. Chokkalingam, founder and chief investment officer at Economics Research, meanwhile, expects a 10% market fall.
I would not say that it is fully priced in,
Okay.
but to some extent it has priced in. I believe that as long as oil below, even if it rises but stay below 100, there is a possibility of another 2-3% fall in the Sensex and Nifty. But by any chance oil goes to 105-10, then we might fall 5-10% also. If it breaches around 110-15, then we will have a problem. So otherwise, I see another 2-3% fall in the benchmark indices.
Brent crude prices are already up 16% in a month amid simmering tensions between Russia and NATO over Ukraine. Brent is above $93 per barrel mark, but a full-scale war can take it past the $100 per barrel mark, analysts worry. Most analysts, including those at Rabobank International and BofA Securities, see Brent hitting the $125 mark by June 2022. On their part, the benchmark indices, the S&P BSE Sensex and the Nifty 50, has slipped around 3% each in the past 1 month. On the contrary, the Nifty Energy Index, that comprises upstream players like Reliance Industries and ONGC, has outperformed with a rise of nearly 6% as oil prices rose during this period. Going forward, market mavens suggest investors to stay stock specific and tread cautiously in the markets. These global factors will continue to dictate market trend on Tuesday as well. Domestically, investors will track the 3-day RBI policy meeting, which will begin later today. That apart, December quarter result of prominent companies including Bharti Airtel, Escorts, Indraprastha Gas, IRCTC and Godrej Consumer Products will be on investor radar. Moreover, shares of Adani Wilmar will also debut on the bourses today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.